Welcome to the Real Estate Majlis podcast, where we dive into the latest real estate insights and trends. Whether you are a seasoned investor or a first-time buyer, our podcast is here to provide valuable information and expert advice. This episode is powered by Bayut, the UAE's leading property platform and proud member of the Dubizo Group. Whether you're buying, selling, or renting, Bayut connects you with real estate solutions tailored to your needs using innovative tools like TrueCheck, TrueEstimate, TrueBroker, and Bayut GPT. From finding your next home to advertising your listings with confidence, Bayut offers real photos, real prices, and real properties, helping you make informed decisions in the market. So welcome to a new episode of the Real Estate Majlis podcast. And today we have the boss that is crunching all the data about the real estate market, Maathio Green, Head of Research, MENA for CBRE. Welcome.
Thank you very much. Thank you for having me here. Appreciate it.
Great to have you today.
Thank
I have
you.
a lot of questions for you.
I can imagine.
And we want numbers.
Real source of data here, no wishful, thinking. Because the brokers are super positive, right?
Yeah.
The brokers are coming and they're talking about, yes, let's keep buying. The market is great. But what is happening right now? Give us the numbers, the true story.
Look, I think they're probably justified to be pretty positive at the moment. We are still seeing a very significant amount of new launches, but absorption, I think particularly from the major developers, still very positive. We are starting to see a future pipeline, which is getting pretty significant. We've probably had more than 60,000 units launched already this year, adding on to more than 100,000, or circa 100,000 last year. So when we start to kind of look at future supply in 2026, 27, 28, we are looking at some pretty big numbers. I think we've probably seen average deliveries in the region of 30, 35,000 over the last maybe 3-4 years. Mm-hmm. This year, that may well take a little bit of a dip just because we didn't have so many, I don't think, in the early part of obviously COVID, and that's had a knock-on impact. But then 2025, 26, 27, we're going to start to see that supply ramp up, assuming developers actually start to push ahead with these projects as quickly as they probably should be. So,
if we go to macroeconomy, UAE's economy is growing, 3.8 expected this year. What is the impact of macroeconomic geopolitical things on the economy and real estate specifically?
Look, I think it's a big impact on sentiment. I think it can be a big impact on the real estate market as well. I think if you go back to 2014, we had oil prices of over $120 a barrel, and at one point up to 140. When that oil market collapsed towards the end of 2004, or the second part of 2014, you saw the impact in 2015. We had retrenchment of companies from consolidation, I suppose, from the office sector, and you started to see a down cycle begin, and that down cycle really carried on pretty much up until COVID. So it kind of started, I think, here because of a macro impact, but ultimately we're in an environment where I think investors are also looking above and beyond, obviously, just the macroeconomic landscape. You could see that with COVID. I mean, that's the best example. So we started a market recovery 6 months into 2020 when, frankly, I don't think anyone was overly positive about the economic outlook. So it can have an impact, but I mean, it's investors can be a little bit contrarian when they decide to look at these factors and not. But look, we're in a super healthy economic cycle. We're likely to grow just, as you said, just sub 4%. Non-oil economy is more than likely to be 5% or even stronger. So even with a weaker oil market, with oil down at close to 70, we're still really quite comfortably above the fiscal break-even, which is in mid-60s. The government's still going to continue to invest and to spend money. So I think it's more of an issue if you're in Saudi Arabia potentially and you're looking at $70 a barrel and your break-even is above 80.
Is it fair to say supply over supply, or we have to be specific? Luxury compared to affordable, commercial compared to residential?
At the moment, we're not in oversupply. We've had rental growth of 20% year on year. The rental market can't lie that much. I think the sales market can hide things, and off-plan can hide things, but the rental market doesn't lie. That's fundamental demand. That's driven by 100,000 population growth as per the Dubai Statistics Centre last year, a trend which is carried on into this year as well. People don't want to leave. You can see that in the registration of new contracts. They are down, and not surprisingly, because everyone wants to be able to renew, so they don't have to feel that kind of full impact of current market rent. So it's a healthy market. I think if that level of population growth was maintained, then I think we would see this market continue
absorbing the supply.
So continue to absorb, yeah. I think when you're looking at, I said, round about a 35,000 units delivery per year, then I think that is eaten up by the inbound population growth as well. Look, and there's always going to be winners and losers in that. There's certain types of housing product which people want. We've seen that post-COVID, the big shift into low density. You're seeing it now again. Better communities are obviously always going to do well. So there's always going to be winners and losers in that dynamic, where you have significant amount of supply coming through, and I would put areas like Meydan, massive amount of supply coming through from Soba, from Meydan, from Mohammed bin Rashid City. So you would expect, once things start to slow, that maybe some of the projects there might be the ones which will see lesser rental growth or stabilization first, etc.
And I think there's another important point. I don't want to contradict what developers do, but the reality is I don't think many developers are going to be able to deliver on time. So I think the delays could potentially also stagnate any potential curve of oversupply to a lot of units. I've seen developers across changing milestone payments, moving the project a few months here and there. So this also will contribute to a slow of the supply, in my view.
I think as well, you've also got to kind of consider the different dynamics and mindsets of different types of developers. So if you are an off-plan developer, okay, give or take whatever, 6 months or whatever kind of leeway you maybe have within your contract, SPAs, etc., you're going to want to deliver, I suppose, to be able to benefit from those payments. If you're a build-to-lease developer, and obviously if you think about the traditional areas of Dubai where that kind of product was more common, they will be more flexible and decide based on the market whether they want to deliver into a market which they perceive to be supplied, oversupplied or unsupplied. So that can also always influence the supply and demand dynamics as well.
In terms of institutional buyers, where are people investing? Are they taking full land, full buildings to lease, retail, logistics? A lot of deals on logistics lately.
Logistics has typically smaller ticket sizes, so it's a more liquid market. It aligns with Sharia principles, whether certain office projects don't, if they have insurance companies or etc. So I think it's found quite significant favour over the past couple of years, particularly given the ramp up in demand in e-commerce and some of the other kind of shifts that we've seen post-COVID. So there's definitely demand there. A lot of funds, a lot of investors come into this market with similar plans. Okay, they want to look at grade A offices. They work out that actually liquidity for a lot of these assets is minimal. They look at retail, and then they understand quickly that the title on a lot of the malls and the way that obviously the merchant families are set up to preserve and to build wealth. They're not sellers of real estate, so retail assets don't trade unless it's small community centres sometimes. Resi, then they look at the Resi market and they suddenly find out that most developers sell off plan, and so it's a market which frankly lacks liquidity that you would maybe expect given the size of the actual real estate market. So I think that's obviously pushed certain entities down avenues that they maybe wouldn't have done previously. You could see that with the REITs and the funds here going into education, buying smaller community assets, or maybe lower quality resi, which they wouldn't have done otherwise in more institutional markets and more kind of formal markets. So look, it's always an interesting conversation, and I think there's a lot of education you kind of quite often need to take clients through to kind of really tell them where the opportunities are.
Can we say the price is now fair, or Dubai is still undervalued? What's your take on that?
I think against many international markets, people would say it's still undervalued. Personally, I think a lot of historic data, which I probably still rely on sometimes, but I think ultimately, given the structural shifts that we've seen in Dubai post 2020, changes to visas, changes to other soft changes to laws, to etc. Dubai is a completely different beast than it was before. So going back to 2014 cycle and looking at prices then, I mean, frankly, any real estate market globally where a peak from 10 years ago was used as a reference point with inflation and all the other factors, just for me, it just is not so much of a relevant figure. I think, as I said, fundamentally Dubai has changed. The way that people look at Dubai has changed. You've got hedge funds here. You've got major investment banks coming here. It's just a completely different place.
So you start a podcast today talking about the Dubai market, but let's shift the attention a little bit to other Emirates. Let's talk about Abu Dhabi, my favorite topic.
And one close to my heart as well.
So what's happening down there?
It's been a very positive story. I think we've been used to cycles in the past where it's a little bit Dubai intrinsic, whereas this cycle seems to be pretty broad, and that's broad from a sector perspective: strong office markets, strong retail markets, strong residential markets, strong industrial markets. Abu Dhabi, Ras Al Khaimah, Dubai. It's been very broad. I think in the case of Abu Dhabi, the biggest shift that I've seen is really just the massive influx of international investors into that market. It's a complete sea change. I mean, you look at the kind of dynamic, and it really used to be heavily dominated by UAE national investors. And
True.
Whilst the value of those investments from nationals continues to increase, their composition of the overall buyer demographic has been very much diluted down. You've had big growth in investments from Eastern Europe, from UK. You're starting to see a bit of increased money, I think, from China and from India as well. But certain Middle Eastern markets, which I think have always kind of been strong. So that's, for me, I think, is what jumps out most. The demand for off-plan, again, the volumes which you're seeing now are just multiples of what we saw back in 2019. So that, again, you've got new developers coming into the market. You've got Modon launching incredibly successfully down at Hudayriyat. You've got obviously Ramhan Island. You've got Jubail. So it's a much more competitive market than it was 5 years ago. But at the same time, all of these names are delivering significantly higher sales values. And again, Aldar being obviously a very good example of that, from 2019 to 2024 is, again, chalk and cheese. So it's been very impressive. I probably the other thing as well is just there's been a lot more focus on quality, and I think this is one of the, I'd say, challenges with the Abu Dhabi market. But if you look at the legacy product that came through in Reem and Raha,
Sure.
investors aren't so keen in that at the moment. They want new product. They want facilities and lifestyle, and really something which is, I don't think it was as well offered in that market. And you see that with a lot of the new product coming through, and Yas and Sadia at price points that we just couldn't have even imagined a couple of years ago.
The influx of tourism as well has been a game changer for Abu Dhabi. The dynamics are quite interesting. They complement. I think a lot of people like to throw Abu Dhabi against Dubai. It's just a different dynamic. You have Yas Island with you can call it the capital of entertainment now, with all the theme parks. And you have places like the Sadia Culture District, which we call the home of the rare, because when you're selling real estate with 5 world-class museums at your doorstep is something that you cannot experience anywhere in the world. And I'm going to say Abu Dhabi is still very underpriced.
What about RAK, Ras Al Khaimah?
The last couple of years have been a bit of a roller coaster for RAK. I think we've obviously, subsequent to the announcement of the Wynn hotels, and obviously what that brings in terms of the potential move towards gaming facilities in RAK. You've seen a massive influx of new investors into that market, and that is land sales on Marjan, it's new hotel investments, it's an increase in off-plan sales, which is really has been incredible. I think there's about just over 9 billion in off-plan sales in RAC in H1. I would, without having all the numbers in front of me, I'm going to suggest that's more than the entire off-plan market in RAC in all years preceding.
Absolutely.
So, it's incredible. And you've got a freehold market, which is probably in the region of 15,000 units, and potentially you're going to see about the same amount again over the next kind of 4 to 5 years delivered. So it's a real game changer. But again, coming from quite a low base. For me, I look at some of the pricing of certain launches, and I would still do a comparison against what I could go and buy for a ready property in Dubai, even like locations like the Palm Jumeirah. And for me, that kind of differential probably should be bigger, as in I think Dubai should be further away given the quality of kind of infrastructure. But there's obviously, as an investor, you buy into what a product and a location is going to be in the future. And I think there's certainly a kind of a high degree of that happening in the case of RAC, but you're also about to see some massive hotel facilities delivered. You've got the $1 billion battery factory being delivered. You've got some really, for the size of the economy, you've got some really, really game-changing new macro drivers which are going to be there to diversify that economy and to really kind of push the tourism sector to new levels. So it's certainly going to be interesting to see how that one evolves. I think there's a bit of catch up that needs to be done in terms of the quality of the kind of the infrastructure, and I mean that from a retail perspective, and schools and hospitals and all these other things which obviously, as an investor, when you're kind of getting your keys in 2027, you kind of want to see more of.
And it's interesting because, again, when you look at the Ras Al Khaimah buyers demographic, 50% are non-residents. So there's a huge influx of external investment into Ras Al Khaimah. They really believe in what is coming, especially Marjan Island. So it's obviously driving the volume of sales there as well.
In terms of behaviors of investors, what do we see trends? Are we seeing people looking for quality, sustainability? Where's the demand, the specifications of demand?
Personally, I still feel that a lot of these trends are developer-driven rather than actual investor. You know what I mean? And the buyer will, not to say we are all sheep as investors, but I think if you put a good product with principles that you feel that you should be interested in, then you will purchase. If certain specific elements were taken away, would you? Probably you still would. I think there's a lot of kind of herd mentality around this. I don't think the market is as mature that residential investors are acting like institutional investors, whereby they will only acquire a office if it's LEED certified. So that even when we're looking at the commercial side, I don't think the investment market is liquid enough to allow every investor to be able to make the decisions that they want based on all these different kind of metrics that they might have if they're in London or New York, and that is largely a liquidity issue more than anything else. So I think there are other trends. I think from an investor perspective, I think one of the key ones has just been the really massive influx of high net worth individuals that we're seeing. Obviously, there's multiple reports from other people regarding the number of millionaires, but you can see that from the quantum of luxury homes. I mean, $5 million, $10 million plus. These are numbers which just, again, even going back kind of 3-4 years, just weren't there. And that's been, again, is another real sea turn, I think, in this market, and just how global money actually views Dubai. And it's very different now. It's all very positive, and people are coming here and making Dubai their home, their second home. They're bringing businesses and they're bringing their capital.
On the high net worth part, obviously, when people talk about the reasons why people invest in the UAE, we talk about safety, tax, lifestyle, and so many angles. But if we actually look on the detail, I think it's the detail that matters. The other day, I think it was Chris Fade on the Virgin show. He was talking about, when I see the Emirates plane, when I'm coming, I feel I'm coming home. And I actually, it resonates a lot with me because we all love to travel. We go to Europe, go to the US, and we obviously have families in different countries. But when, after a few days, you have the feeling of like, I want to go back home, and the home is the UAE. But what does that mean? It means that today, if you need AC service 1 a.m, you get it. You can have an ice cream delivered to your home in 45 minutes before you even decide between which Netflix show you want to watch. The accessibility, the digitalization, all the processes that are so seamless is something that very rare you see in other countries. And I think that is the underlying reason that a lot of people, when they come and they experience to a certain level, they feel compelled that their home countries, they cannot offer. And it's very hard to go back. How many people I've seen migrating, coming back after 2-3 years, because we've been spoiled to a certain extent, and to be able to live a life in other countries is sometimes a bit difficult.
And I think, look, the reality, unfortunate reality, is that, the situation in Europe, in the US, from a geopolitical perspective, from so many different kind of viewpoints, whether it be kind of political challenges, whether it be safety, very much safety. All these factors are playing more and more into Dubai's hand. And I'm always surprised at how many people are coming in from Europe. So I think from countries where we maybe didn't really associate them, and I'm thinking, Scandinavian countries where typically these are the right up in the rankings for the top kind of safest countries or best places to live. But we're seeing more and more people from these countries actually come to Dubai and make it a home, and I think that is really kind of telling for what Dubai has been able to do and what it has to offer.
Where are the opportunities for investors?
When you think about the opportunities, think about the exit as well. Because I think a lot of investors there want to know what signs, what are the small signs I should pay attention, because people want to buy when everybody's selling and selling when everybody's buying. So what are the signs they should be looking at when that could be a potential?
So I'm going to use a Dubai trend, and I'm going to apply it to Abu Dhabi. I mean, for me, I live in the Palm, and the amount of renovation activity that you've had across projects like the Shoreline, Golden Mile, etc., over the past 5 years has been incredible. And people are buying a good base in the units are large, the floor plate's pretty open, so you can go in and put your stamp on something, you can completely renovate it, and you can elevate the value significantly, and bringing it up more in line to a lot of the new launches that you obviously will see, a lot of the off-plan projects. So I think that has been a very obvious trend in Dubai. You can see it in the villa market as well. And I don't think it's happened really in Abu Dhabi. But you've got projects like Zaina and quite a few of these older legacy projects on Raha Beach, which are really big spaces, really, 3-4 bedrooms, units which honestly really lend themselves to a significant renovation uplift, and they can be more comparative because the product is good. Your waterfront living, great views. Location is very, very good. Good schools, good facilities. And for me, that's a trend which just hasn't really made it to Abu Dhabi. And given the pricing of some of these new off-plan launches, particularly in the luxury end, there's actually quite a significant opportunity there.
Good point. I think renovation is something that we start to see now over the last 12 months, and a lot of people getting to renovating townhomes. And in fact, the prices on some communities like the Springs, the Meadows, have escalated so much because of renovation. So if you got some spare cash and you can afford buying a home, an old 10, 15 years old, then there's a definite opportunity. Maathio,
Amazing.
Thank you so much for your time. It was very insightful. I think it shows that the market still feels quite bullish, and we should stay positive. And thank you.
Good.
Thank you so much.
Thank you. Thank you, guys.
Bye.